Trading for beginners in one day. Everything you need to know? Imagine that in just one day, you will be able to understand trading. Seems unrealistic, but not really. If I know all things I'm going to tell you today, how many mistakes could I have avoided? How much nerves and money saved? Many beginners come to online trading with the hope of an easy path. But in reality, they face chaos and misunderstanding. I was like that too. And if I had a clear plan and a simple structure, I wouldn't have lost so much time. Now, I show you something that will completely change your idea of trading. It will not be beautiful words, promises, or golden mountains, or even motivation. This is a clear structure that everyone should know. It is a sequence of steps that helps to understand this trading from scratch. We'll start with the foundation, the very basics, fundamental information. Then I'll tell you which one-twos or websites that will help you with your work. And we will touch in trading psychology, because this one is the most important nuisance in the option which many beginners turn a blind eye to. Also, pay attention to technical analysis, and in the end, we'll apply the knowledge gained in practice. This way, by the time you watch this video to the end, you will have a clear understanding of trading and how to start properly. Let's see how the market functions and how to perceive it correctly. There is a huge number of small things in trading that can be confusing, especially if you study them separately. So, I want to give an understanding of the big picture. Let's take a look at the graphic. So far, we don't care what lines or indicators are there. The main thing is to understand the very essence of the price movement. When you see a graph where the line rises or falls, it's actually a reflection of people's behavior, and to be more precise, their psychology. There are always two sides to the market, buyers and sellers. Everything is a bit more complicated than just click, buy or sell. There are algorithms, large transactions, and various mechanisms. But the basis is simple. The market always strives to balance supply and demand. For example, if the price increases, it means there are more buyers than sellers. But as soon as the sellers begin to dominate, the prices go down. The process is repeated over and over again. It is these fluctuations that create volatility. The essence of trading is simple: market and price analysis. For example, the euro and dollar currency pair costs 1.10. You think that in 5 minutes the price will be higher. Then you open for an increase. If after the specified time the rate really went up, then you get a fixed profit. And if the price went down, then the transaction is negative. You lose the amount. Now, let's find out where such intraday trading chances come from. We usually work with short periods of time. The price of the currency pair or other assets changes not only for months or weeks, but also every day, every minute. Even within the same day, the market can rise and fall sharply. These fluctuations make it possible to open trades. For example, all currencies rise, fall in an hour. In this case, if the trader patiently waits for the right moment and analyzes the chart, he can open a trade in the right direction, and the results will be visible in a couple of minutes. It is important to understand that everything here is based on analysis and calculations. You need to determine exactly what risk you are taking, where exactly you are entering the trade, and what are the chances that the forecast will work. Without this, there will be no stable earning. To work in the market, you need only 3 basic tools. Chart analysis platform, for example, TradingView. There you can technically analyze the chart. This resource is more convenient and popular for most platforms. You can use it not only to build lines and mark levels, but also to make backtests, that is to check how the chart previously behaved in certain situations. Online trading platforms. First, it's better to practice on a risk-free training account. This is a great way to work out your strategy before moving on real trades. Transaction log. It can be a Google spreadsheet, Excel, or even a regular notebook. The point is the same. Fix your trades. When you see the numbers in front of your eyes, mistakes become more obvious and progress is more negotiable. By default, the charts are linear, but it is better to switch the candle format. Candlesticks are more details. Where the price opened, where it closed, how high it rose, or how much it fell. Also, each candle has its own time frame, from minutes to weeks. Now, let's talk about the most important thing, psychology of trading. Honestly, without it, all the knowledge and tools don't work. This is the foundation that decides everything. Either you can develop or you can drive yourself into a dead end. There are 3 settings that you need to accept. First, a loss isn't always a bad thing. In trading, this is part of the process. Second, mistakes are not failure, but a normal occurrence. Third, a profitable trade is not always a good one, and losing trades is not always a bad one. What matters is how it ended, but whether you followed the strategy. The point is to control the risks. Let's say you're willing to lose $100 on a trade. In advance, set a limit for yourself so that in case of failure, the loss doesn't exceed the amount. If the price goes in the predicted direction, you get a pre-knowledge percentage of profits. If not, you lose the transaction amount. Therefore, the essence of this is to properly manage your deposit and maintain stability. Even if some of the trades turn out to be unprofitable, this is not crucial. The main thing is to keep your overall statistics in the black. Now, let's get back to the most important part, is our center of strategy. Every time we are going to enter a trade, we need to be prepared for the fact that the results may not be in our favor, even before entering. And if we want to give ourselves a chance to make money, we need to accept the risks and mistakes. Many people think like profit is possible only when you do the right thing every time. But this is a myth. Let's imagine a situation. Let's say we're lucky and one of the random trades bought a good profit. This may seem like a success, but it's actually when we're risking the most, because one-time luck creates an illusion of correct actions and encouraging mistakes. In trading, it is not the one-time gains that are more important, but the process, a clear system, discipline, psychological stability. The point is that the results do not determine whether you are right or wrong, but the ratio, how much you earn in profitable trades and how much you lose in unprofitable ones. All is kept in balance. If you know your numbers and you know how to manage risks, you will be able to objectively understand whether the strategy works and is making a profit. Now that you have understanding of risk and psychology, let's take a look at technical analysis. Everything looks complicated here, but in fact, there are a few basic elements that will help you navigate. The trend. This is the general direction. To understand the trend, I use trend lines. We look at the peak value of the chart, at the minimum and maximum. In other words, the extremes. And from them, we understand what the previous value was. If higher, then the movement is upward. If not, downwards. Further levels. These are zones where the price is resting on the border, bounces down, preventing it from breaking through levels. The Fibonacci sequence. These levels are required to identify potential entries and exit points. Levels help you to determine which areas of the trend are most likely to correct or reverse. For example, during a downwards, they help you to find the best to open short positions. In the period of uptrend, they serve as an indicator of a good buying opportunity during a correction. All this gives you a basic, but even they are enough to build a simple working strategy. Then everything is built step by step. First, you find an idea, then you formulate rules. Where to enter, where to leave, what risk to take. After that, you test the strategy of training accounts, and since I have already gone through the path of getting acquainted with all the nuisance of trading, I will show you how real trading looks like on the platform. So here we go. We choose a financial asset based on the EMA and RSI indicators. We found a deal on the Australian dollar and the New Zealand dollar OTC. We can see that the price has reached the support of the 100 EMA line. And the RSI also shows us that it has reached the oversold point at the 30. Regardless of these values, we open a deal for an increase over $250. And yes, the price breaks through and the level will take a plus. We are changing the financial assets to the USD and Mexican peso OTC. What I see is that the price has made a correction with the upwards exit. And at the moment we see two large green candlesticks. This is called collecting liquidity. And after such an exit to the top, a pullback is likely to form. The deadline in the price is almost indicated in the RSI, which is the overbought and forms of deadline. Open for a reduction of $250. The price fluctuates at the entry point and confidently goes in our direction. The deal closes in a positive territory. It's too easy to relax yet. Let's continue. We're changing the assets again. Carefully study the charts. We found a good entry point on the British pound and Australian dollar OTC pair. We see a sharp jump up and also that the price fluctuates at the entry point and confidently goes in our direction. The second signal has worked out very well. While in our balance sheets, it is steadily growing. The deal closes in positive territory. It's too early to relax yet. Let's continue. We increase our trade to $550. Watch the chart. There is a fix for 20 EMS and the price has come closer to it. Remember, when there is a body fix for any EMA, we consider the deal in the direction where it is fixed. From these values, we put up a deal. Great! As I said, we're taking another plus deal. We're making great progress. Our balance has increased by amount of $1,000. I found an interesting situation on the USD and ARS OTC pair. EMA minus 20 and 50 seems to squeeze the chart for both sides. And is it about to break through to the top of the 50 AMA? This pattern is painfully similar to me. I am always happy when I find it. Almost always it is 100% deal. Damn! While I was explaining to you, the deal started to be implemented. As I said, well, nothing. Let's go in. It has a lot to grow. Open up by $250. Testing passed and the schedule began to decline. So people most likely in the 6th trade will close in the negative, but the price came to an excellent entry point, rested on the same EMA. So I immediately opened a deal for $550 up from here. The 6th trade closes in a negative, but the 7th for $550 successfully takes a plus. Well, in general, as I said, we got into the situation late. As a result, the deal is closed in a negative territory. But at the same time, the deal for $550 brings us a plus. On balance, meanwhile, we already have $1,704. We don't have much time left, so let's look for a good entry point for our deal. I found a good situation on the CHF and JPY OTC pair. The situation is similar to our recent trades. The chart is rested on the EMA 20. From these values, you can open to the top, opening for $250. Great, super, clear working out, even the slightly nervous. Let's look for the last deal with you. There is literally nothing left. I found a good position on the Euro and USD OTC pair. The situation is similar to the previous one. We hit the 20 EMA, could not go down, so we are considering a buy option opening up. We didn't get the schedule, a chance. We close in the worst plus. Our balance is $2,164. Thus, we have earned $1,660 with you. This is a great result. That's it, friends. Just a couple of trades ago, we were in the red. But discipline, code, analysis, and iron nerves did the trick. And let's sum up. We went from the basics to the first tools discussed in psychology, sorted out the nuisance of technical analysis, and saw in practice how important all this nuisance I voiced out today are. Now, you have the holistic understanding of how to get started in trading. And if you want to continue training and start earning money right now, then join my Telegram channel, because that's where I share what really works. There you will find tips, deals, signals that will help you every day. And now you have a choice. Continue to sit and wait for the right moment, or today become part of my community where people really start to make money. As soon as you subscribe to my channel, I will personally guide you step by step and explain everything in simple words. With my support, trading becomes simple and straightforward as possible for you. Don't put it off until later. This possibility may no longer exist. Subscribe and let's earn money together. I left the link in the description.